Hey everyone, Dan here. Today we're going to take a look at the lockup period documents as it pertains to 23andMe. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also in the description below, I'm going to put a link for a Google form. If you would like to receive an email newsletter from me once or twice a week at the most, feel free to throw your email in there. Once I get to 100 folks on that list, I will go ahead and start sort of conceptualizing what the newsletter will look like. Before I send out the first one, I'll send out an announcement to everyone who's on the list, give you an opportunity to opt out if it's no longer something you're interested in. So I don't expect this to come to pass for about a month. So you have some time before it will even hit your email inbox. But be sure to put it there in the meantime if you'd like to be on the list so you don't forget and so that I get to 100 and can start my work on it. All right, so a couple of things. We're obviously going to go over the lockup details in the documents from the SEC as it pertains to 23andMe. But also, after we do that, I'll come back to the chart and we will chart some additional price points to look at in the week ahead, since it has fallen through my previous cautionary zone at 1177 and then stop loss at 1167. So let's kind of try to see what could be going on and what we could look for in the week ahead for some potential either just bottoming out and consolidating along a floor or even some bounce dip buy potential areas. But first, let's get into the documents. So here is the SEC filing as it pertains to VG Acquisition Sponsor LLC, who was the sponsor for 23andMe. You see here, 23andMe, blah, blah, blah. The highlighted portion is, I believe, the relevant part, as it always goes with this sort of like quasi-legal jargon and financial confusion in these documents. If you have a different take on this, or if you have another source that seems to point to a different outcome from what I'm describing here, please put that in the comments below. I don't ever fear being corrected on something. These are challenging documents to get through. There are a lot of different documents, so even finding the one that seems the most accurate and up to date can be challenging, which seems weird, but that's sort of details for another video. I'm going to be doing a series down the line of how we could get we can make a bunch of progress cleaning up these documents, making them much clearer for the public to digest and understand. But tabling that for now, really, if you have any additional info or any you believe more correct, more detailed info, please put it in the comments and I'd be happy to sort of follow through on that, because I want to make sure that folks are getting the best info possible. But the highlighted portion says, the sponsor has agreed that 30% of the Class B ordinary shares held by the sponsor as of the date of the sponsor agreements, okay, aka the earnout shares, will be subject to a lockup of 7 years. Okay, before you run with 7 years, hold on. The lockup has an early release effective with respect to 50% of the earnout shares upon the closing price of the new 23andMe's Class A common stock equaling or exceeding $12.50 per share. So that's the first thing that we want to put a pin in. $12.50 a share is one of the goalposts for this early release effective date to come into play. All right, moving on. For any 20 trading days within a 30 trading day period. Okay, so that's the second half of the equation. So take a 30 trading day period, and as long as 23andMe is trading equal to or above $12.50 at close for any 20 of those 30 trading days, then that unlocks 50% of the earnout shares. Okay? With respect to the other 50% of the earnout shares, upon the closing price of the new 23andMe Class A common stock equaling or exceeding $15 per share for any 20 trading days within any 30-day trading period. So same criteria with a slightly different price. Same, I guess, time window, I should say, with a different price, $15. So hypothetically, if 23andMe closed at $16 for 20 of the first 30 trading days. I believe that means it would unlock all of the shares. Okay. As of the date of the accompanying proxy statement, the sponsor owns approximately 20% of the issued and outstanding ordinary shares. Okay. So here's where we are. So let's just to boil this down and simplify it. I'm assuming, though it doesn't seem to exactly say in here. Maybe it doesn't. I guess it doesn't say that this 30 trading day period starts at the close of VGAC or VGAC, the former SPAC. Maybe it does here somewhere and I'm just not seeing it, but that's typically the case. So they're saying as of the first day that 23andMe is trading as ticker symbol ME, within any 30 trading day period, 20 trading days, and then here are the two price thresholds that it has to meet. If it does so, it automatically unlocks the accompanying percent of locked up shares. So let's go ahead and first grab our date. So we have here a press release that was put out. Trading is expected to begin on NASDAQ on June 17th under the new ticker symbol ME. And then we have the 23andMe blog ringing in 23andMe's next chapter. Nice play on words there. 23andMe's CEO, co-founder, and oh boy, I'm not going to try that one. But anyway, she rang the opening bell on, I guess, June 17th. So it looks like June 17th was the correct date. As you've heard me say in previous videos before, I'm sorry if you hear screaming in the background. I have small children. I'll do my best to edit it out, but it very well may make it into the video. So hold tight with me. I'll try to talk over it. So let's start from June 17th. This is further supported hopefully this piece of the equation is not up in the air. But if I go to Yahoo Finance and put in ticker symbol ME, I go ahead and look at the historical data, and I see that the earliest date that they have is June 17th, 2021. Okay, so these are all of the trading dates. So if we count, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trading dates. And I do a lot of this stuff in real time, going from tab to tab, highlighting things that I'm looking at, counting things in real time, because I want you all for anyone who's watching it who wants to just be able to do this themselves or go through these steps themselves, I don't want to just throw it at you and be like, this is all the info. I want to go through it piece by piece. And I know oftentimes, probably always, that makes for a longer video. But again, I think there's a lot of value in you sort of knowing how to track down and sort of accumulate this info yourself, because I hope I don't get hit by a bus, but if I do, you don't want to be relying on me to break this stuff down for you and serve it up to you in a video. You want to be teaching yourself to be able to do it on your own. I think that's really important. No matter who it is that you're getting stock info from, keep in mind that you should be trying to learn this stuff, create your own method, create your own process, learn how to do these things for yourself, because then you will always be in business. All right. Soapbox is being put in the closet for now. So what did I just say? 12 trading days? 9, 10, 11, 12. Okay. So 12 trading days pass, and it looks like the closing price, $12.50, is what we're looking for first, right? Looks like we only have 2 trading days that it closed over $12.50. And so right now it's not looking super likely that on the 30th trading day, so we have 18 more trading days. So it would have to close above or at $12.50 for every single remaining trading day. Is that right? Yes. To reach 20. Because I think we then have 18 more trading days to get our first 30 trading day window, right? Because we have 12, so 18 more. Also, we only have 2 where it's closed at or above $12.50. So we would need every single one of those 18 in order to close at or above $12.50 in order to unlock at least 50% of the locked up shares. So seeming unlikely at the moment that this initial lockup period is going to end for any percentage of these earnout shares within this first 30-day trading window. And just remember, as it gets to trading day 31 and trading day 32, it then knocks out these first 2 trading days because they're no longer in that 30 trading day equation. Because what you're looking for is a 20 trading days within any 30-day trading period. So it has to be within the 30 trading day umbrella that those 20 trading days exist. So once we get to trading day 31 and 32, these are going to be gone. So I think there's probably a while before these lockup shares are going to come into play. Again, if you are reading any of this differently, please let me know in the comments, and I will do my best to try to sort through it and put out any additional info, corrected info, what have you. But that's the way that I read it at the moment. So that's what I would keep an eye on. Keep an eye on the historical data, the close, keep an eye on these goalposts of $12.50 per share closing and $15 per share at closing. But you're going to need to put a string of those together within, a 30 trading day period in order for it to even come into play. Otherwise, 7 years, baby. All right, well, that's what I have for the lockup period stuff. So let's flip over to the chart and see what we might look for in the week ahead as it pertains to, some potential price targets to be aware of. Before I get into this, if you are looking for a free broker, I have 2 that I would strongly recommend. One is the charting software that I'm using here. Webull is also a broker with a bunch of bells and whistles, has a lot of different capabilities, and I would strongly recommend them. Also, if you want something quick and easy, something that you're not going to do charting on, but you're just going to go in to quickly execute a trade from your mobile device, Gatsby is really modern UI UX, very user-friendly, sleek, quick, nice execution times. I have been using them for quite a while, and I think that they're great. So links to both in the description below. I think we each get something for, you using that link to sign up. So have at it if you want. Okay, kids. So I know there's been a lot of disgruntlement around the fact that I had this tight 1167 to 1216 range of prices, really just 3 price targets and a cautionary and a stop loss zone, and it blew through that to the downside. That's why stop losses are there. So just keep in mind that when I put a stop loss there, I'm not saying that you should adhere to it, but I am saying if it falls through that cautionary zone or that stop loss, it probably has quite a bit of ways to go. And you see when it established underneath that stop loss, it had almost, or maybe that was an entire day. It had an entire day of red candles. So, the fact that it couldn't hold the cautionary and then fell through the stop loss, I have those there for a reason. You don't have to use them as stop losses, but just know that to me, I have a stop loss in a certain place because I think that if it can't hold that stop loss zone, that it's probably going to fall quite a bit and potentially relatively rapidly. So that's, what we saw here. So just keep that in mind, and keep your risk in order. I mean, you got to do your own risk management here. It's not, you don't have, maybe you have a financial advisor on your end, but it's not me. So, keep your risk in order. Do your homework. Do your own due diligence. Know how much money you want to put into any particular trade and how much you're willing to risk and why. Do things for a reason. All right. So here's what I would look for to the downside. And to be honest, if we kind of lose this zone, let me zoom out a little bit more. At some point, you kind of get into no man's land. Yeah, once we get past here, let's see, what do we got here? This is kind of like right around $10 here is about the last area to look at. So I'll put that there just for the heck of it. But just know that, as we bust through these zones, if that happens, I'm not saying that's going to fall through these zones, but to the extent to which it can't hold these lower areas here, once we get under 10, there's not really a ton of previous price activity to go off of. There's some floor area around like 980, but there's not an area that really encompasses both resistance and support, which is what I would define as like a truly strong area. The last one of those is 10, but again, I think that's probably where VGAC launched its SPAC at. That was probably the price floor. I mean, double check that. Kind of doesn't matter at this point, but that would essentially be like one big sad face post merger. But anyway, to the downside, I would look at first these areas here of 12, I should say it right now it has this immediate support area of 1088. So I would look for it to hold there first. You have this previous support and resistance here, support here, resistance here, and it's using it as support right now. So there is some history in this area. Hopefully it can build some support there for the bulls and make a little bit of a an attempt at least at that 1125. It hasn't built a ton up in between like 1088 and 1125. I mean, I know that that's not a huge price range in between. Might be a little stickiness like just over 11, but I think it's generally okay. But if it can't hold that 1088, it's probably got another solid 30 cents or so to fall before it tries to catch on the next zone at 1058. You see the previous support here, previous resistance there, support picking up there. 1037, this wick support here was previous resistance as it was building up to there. And then, like I said, lastly but not leastly, $10, which is just a bunch of previous support and resistance, all the way back to when VGAC launched. But that's what I would be looking for. There's not really a trend line in play right now. There's not really a channel in play. There's, mostly I'm noticing these gaps that it tends to form, and then it does seem to want to fill the gaps. So like there's a gap here that still would need to be filled because the gaps get filled from the top to the bottom and vice versa. So you want to see a gap filling from the top down, but then you also want to see it coming and filling from the bottom up, and that hasn't happened yet. So that could return the price over that 1216. Obviously the big one, if you haven't noticed it, is here, which could drive the price back up over 13. And again, it does seem to fill gaps from what I'm seeing in the previous price activity. You see one here, you see it filled it from the top down, from the bottom up, like relatively quickly. Gap here, it filled it from the top down and the bottom up. And so it has a bunch of examples of this. Gap here, filled it from the top down and then the bottom up. And, but this one, it just filled it from the top down and then it couldn't, make a return back there. There's another gap here. That's kind of questionable maybe. That could be filled already. If you see, it would have come in from the top down and sort of filled it. I don't know. That one's a little bit of a tricky one. You'd think it would be pretty obvious, but it's a little weird with this one, whether or not it's completely filled from both ends. But, there could be something else there. But, I mean, regardless, if this one is still open-ended and needs to be filled, then that sort of supersedes all anyway. So I would just pay attention to that. But the first one that would sort of like set this whole thing off and running would be this one here, because that would get it back over that 1216 support if it can hold it. Or does it fizzle out after it runs up and fills that gap? That's the question. But I would look for it to do that in the very near term. So that's my potential good news for the bulls. RSI very low, as you would expect. Even with all that selling off, it barely spent much time in oversold territory, surprisingly. But definitely a bunch of buying pressure able to come in if it wants to based on the RSI. Slightly bullish crossover on the MACD, but mostly it's just consolidating from like the 22nd of June on, even through this like bearish activity. There was no like major bearish momentum that came in that wasn't then relatively quickly squashed. But it is sitting well under the baseline now. So again, if it does want to make a run up and does want to push toward filling this gap and getting into like the low to mid 12s, there's plenty of run room for it as it pertains to the MACD. So I would keep an eye on that as we get into the trading week and just sort of like watch those, potential support zones to the bottom, and then look for, potential indications of bullish activity coming up to fill this gap. And again, if it fills that one, I would have a strong eye on this one because, again, it's just to say it has this history of leaving a bunch of gaps quite frequently and then filling them relatively quickly. And this one's been hanging out for a long time, so I don't want to see it age too long. If it ages too long, then I don't think that it's going to fill it in any meaningful period of time. And so by the time it does fill it, it'll just be a byproduct of it being like, 2 or 3 years down the line. And then, the gap isn't the factor at that point. So it would need to fill this pretty quickly if it's going to. So I'd keep an eye for it running in that direction soon. Or if not, then, take that out of the equation for a potential bullish catalyst. All right, well, that will do it for this one. I wish you the best of luck in the week ahead. And I appreciate you watching the video. Feel free to share this on Reddit, Twitter, Facebook, wherever you share stock info. I definitely appreciate that a bunch as well. All right, folks, I will see you in the next video.